So you can see the NASDAQ last week just ripped. I mean, so you had tech is now up 3.91% for the month. I mean, whoop, hoo-ah, how about that? I mean, up 17.58% for the year. Now, I don't know how many more times you're gonna get a chance to buy tech, but I can't say it any more clearly on pullbacks than the way that I say it. I say it very clearly, crystal clearly, like the water at Lake Louise, very clearly. Okay, so this is kind of how you have to think. Now you're sitting there saying, ah, damn it, I missed buying the damn dip. Oh, I hate this market, it's expensive. It's just whatever you're gonna say about it, that is the score. Some people have said, well, I like how utilities act. Are you kidding me? Look at how utilities act compared to tech. Go one more time there. Utilities are up like 6.9% this year. That's awful. They were up like 0.8% last week. That is in stark contrast to some of these style factors, which I said I'd call up. So you can show the bongo board, maybe Josephine, of style factors. So I underlined some things that you would want to be long in a growth accelerating environment. So either growth is slowing or accelerating. Now, if it's accelerating, you probably want to put some beta in your portfolio and some sales and earnings growth. So you can see both sales and earnings growth, top 25%, and we're talking about the top 25%, looking at the top quartile of S&P 500 sales and earnings growers versus the bottom quartile. You can see that last week, as opposed to utilities up less than 1%, those were up more than 2%. For the year, top sales growers, top earnings growers are up double digits, up 12.3 and 11.5%. See that all the way over on the right. Look at how much better top sales growers and earnings growers are doing all the way at the right column versus slow growers. Slow growers up 1.5 to 1.6% this year. That's bloody awful. You know, that's terrible. So that is the point. I've been trying to make it in as many ways as I possibly can. Be long growth. Okay, be long growth. I know we have different, even subscribers who disagree with our growth forecasts. They have more of a bearish growth tilt to how they're set up. That's not working. So at the end of the day, we think we know why it's working. We're expecting to see Q3 in particular, US growth accelerate relative to where we've been here in Q1 and Q2, which is north of 2% on a year-over-year basis. So on GDP I'm talking about. So that's what I have to say about that.